Are you looking for ways to make your trading more profitable? Then you've come to the right place. In this video, I'm going to teach you the same day trading strategy that helps me manage $2.4 million in prop firm capital and make profit consistently. Hi traders, my name is Bernd and I've been trading full-time for 10 years now. I've grown my prop firm capital to over $2.4 million in the past year with specific proven strategies. Today, I want to share with you one of those strategies and provide a detailed explanation of how it works and why it's so effective. This is not just a theoretical lesson. I will guide you through the practical steps of the day trading strategy that has proven successful for me. The strategy is applicable to all US equity indices, Dow Jones, S&P 500, Nasdaq and Russell. You can use the futures or the CFDs. This lesson will cover what Globex is, with a focus on the Globex breakout bait, how it is used. The topics to be discussed include setting up a Globex trap, the rules for trading using this trap, and several chart examples of how it can be used. Let's begin.
Oh yeah, but this is basically our day trading strategy.
It's a day
right?
trading. I make about 2 hours in a week on Globex, and that's enough for me. I'm happy with that.
Perfect.
On an FTMO account, it's perfect. So I'm happy with that.
To better understand the term Globex, let's review some history. The Chicago Mercantile Exchange, now the CME Group, created an electronic trading platform called the Globex trading system in the mid-80s. Although this platform was introduced early on, electronic trading did not become popular until the mid-90s, when the E-mini stock index futures contracts were introduced. The CME Group created this new style of order execution to compete with the Eurex exchange, its international competitor, which is an all electronically traded exchange. In the United States, futures exchanges used to rely on open outcry trading pits on their exchange trading floors, which required a large amount of personnel to run smoothly and led to higher operating costs. However, CME Group recognized the need to develop an electronic trading platform to stay ahead of its international competitors. It's worth noting that futures exchanges were initially designed to serve a specific entity, the commercial trader. The market participants that trade over 60% of futures contracts daily volume are typically big corporations. The futures exchanges earn profits for every traded contract. Commercial traders or speculators who trade a contract pay a commission that includes an exchange fee collected by the exchange. If an exchange uses trading pits and has high operating expenses, they pass on the cost to the customers through higher fees per transaction. On the other hand, an exchange that operates on an all-electronic platform has lower operating costs and can offer lower fees to customers. This can attract customers away from the exchanges charging higher fees. The CME Group introduced electronic trading to its customers to retain their large commercial accounts. This enabled nearly continuous trading in the futures market, with orders being filled in the trading pits during the day and electronically after hours. The members of the exchange who were floor traders did not permit the Globex electronic platform to operate during the trading pit hours because they depended on the orders coming to the exchange through them to earn money as market makers. So there were 2 trading sessions, open outcry and electronic trading. Regular trading hours, RTH, refer to the market trading sessions during the day while the trading pits were open. After the RTH session, the Globex electronic session, also known as the extended trading hours, ETH, would trade until about 30 minutes before the next RTH session opened again. After going public on the Nasdaq Stock Exchange, the CME Group embraced electronic trading with the Globex platform alongside to the open outcry RTH session. As a result, electronic trading now accounts for most of the futures volume. However, the RTH session remains the busiest, even though it now uses electronic trading. In the Globex system, trading is done electronically using computerized orders, including algorithms or manual buys and sells made by traders. This type of trading runs almost continuously 24 hours a day, with occasional shutdown periods for maintenance and specific hours of closure. The Globex system refers to the electronic trading platform used during the overnight hours. While some traders mistakenly refer to it as a session, it's more accurate to think of it as a system. So when you hear someone say they are trading the Globex session, they actually mean they are trading on the electronic platform during those hours. To provide additional details about the Globex session, it is an electronic trading platform that operates during extended hours and is also known as the overnight session, specifically for the S&P, Nasdaq, Russell and Dow Jones. The Globex session commences at 6 p.m. Standard Eastern Time and ends at 9:30 a.m. Standard Eastern Time. To clarify, Globex is a system that trades continuously. This means you can place a trade during either the regular or the old pitch session hours and it will still be part of the Globex system because it is traded electronically. However, for simplicity and to distinguish regular extended trading hours, we need to assign them time slots. The trading hours have an extended session from 6 p.m. to 9:30 a.m. Eastern Time, known as the Globex session. At 9:30 a.m. the regular trading hours or day session for equity indices begin until 5:15 p.m. Eastern Time, when the new day officially starts. To summarize, the focus is on the Globex session from 6 p.m. to 9:30 a.m. Eastern Time. Now let me share my screen now to start the strategy portion.
So, what is the Globex breakout bait and how does it work? This is the strategy portion of our discussion now. During the overnight session, the extended trading hours, highs and the lows are formed. On the chart, you can see a high and a low that were set during this time, which will help to set up the trap. As the day session begins, many traders are familiar with the Globex high and the low price ranges. We plan on using these ranges to catch novice traders. So for now, our focus will be on identifying the high and low prices during the extended Globex trading hours. When the price rises above the highest point reached during Globex trading hours and regular trading has begun, many traders, they become bullish and either buy the breakout or prepare to do so. Now, when this happens, when traders buy above the Globex high into supply level, that's what we want to see. The bullish or bull Globex trap is set. And from there, we look to sell from those breakout buyers. Again, key thing here when it happens into a supply level. That's very, very important for us. We don't want to just short randomly. We want to short in a supply zone. So just to recap here, price breaks above the Globex high into a supply level, then we want to start looking to take that short trade. We would set all this up ahead of time, but that would trigger our entry to short. We would be shorting from those people that are buying the breakouts above the Globex high. Now, it works both ways obviously here. When price breaks below the Globex low, so we are looking at the lows now, from the low of that extended trading hours. Once the regular trading session begins, again 9:30 Standard Eastern Time, once price breaks below the Globex low, these traders become bearish and they start planning for breakouts or taking breakouts. In other words, they are shorting. So if they short into a demand level, the bear Globex trap is set, and that's where we would be looking to buy from them. So you can see on this chart here, price trades below the Globex low, right into rally-based rally demand zone, and that would have been a beautiful trade for us and not a good trade for those short sellers right below the Globex low, and that is the trap, ladies and gentlemen. All right, so let's talk about how we do set up this trap. How do we make it easier for ourselves to place this trade? Well, the first thing that you want to be aware of is this whole Globex trap here is really set up for the equity indices primarily. Could we use it in other markets? Sure, we could try to see if it works well in other markets, but really this is mainly in equity index type of play here. So the S&P, Nasdaq, the Russell, the Dow Jones. Those are the markets that we want to focus employing this particular strategy. All right, let's take it a little bit more in a detailed look here. In this chart here, you can see that we have the regular trading hours or the day session, the day hours. Now keep in mind, this is all in Standard Eastern Time, so please make sure your chart settings has to be set to kind of exchange time as well. Now, The chart that you see there is a day session of one particular day. Then, once the day session is over and we begin the Globex or overnight session, the extended trading hours, it would look something like this. During that time of the extended trading hours, we would form a low price, and the price would form a high. So we would mark off there's a low and there's a high. Then, on the current day, here we are, the regular trading hours or the day session begins again, and we can see that here. So really 3 parts to this here: the prior day, the Globex high and low, and then the current day. Now, during that Globex high and low, one thing that we want to look for is, well, look at the range here. The high to low range during that extended trading hours. Sometimes you get really big ranges, huge ranges overnight, and that's typically caused by some big events either in Asia or in Europe that's causing a strong drop or a strong rally in price. But a lot of times you'll get a very small or tight ranges too, so the ranges will vary from day to day.
Let's go through the step-by-step process of identifying the Globex traps. I suggest writing these steps down or keeping them handy for future reference. To clarify, here are the steps. Step 1. Check the chart for Globex opening time, which is 6 p.m. Standard Eastern Time. Step 2. Note when Globex close, which marks the start of the regular trading hours at 9:30 a.m. Standard Eastern Time. Step 3. Identify the highest price that was made during the extended trading hours as Globex high. Step 4. Identify the lowest price that was made during the extended trading hours, overnight hours, as Globex low. Step 5 is to look for supply zones above the Globex high, but it's possible that there won't be any. If there aren't any good quality zones, then we won't take that trade. Step 6 is to identify demand zones below the Globex low, but we only want to focus on good quality zones. Step 7 is to get ready to take trades that meet our strategy rules by setting up trade, stop, entry, target, and position size.
Let's walk through these here one step at a time. Here we go. Step 1, you see the chart example. Identify the Globex opening time, 6 p.m. Standard Eastern Time. Step 2, identify the Globex closing time, 9:30 a.m. Standard Eastern Time. Step 3, identify the highest price that was formed during the Globex session, which you can see the arrow pointing to it there. Step 4, identify the lowest price point that was formed during that extended trading hours. Step 5, identify any supply zones that are above the Globex high that are located ideally in your time window of opportunity from 8 a.m. to 11 a.m. Your lower time frame high quality zone should be located in your window of opportunity. And we get ready to trade those, if any. Remember, if there was nothing there of any good quality, then just pass on the trade. So, same for the demand zones onto your in step 6. Identify any demand zones that are located in your time window of opportunity, ideally from 8 a.m. to 11 a.m. below the Globex low. If there was nothing there, again, of any good quality, then just pass on the trade. And step 7 would be to go ahead and prepare the trade that meets your strategy trading rules. All right, ladies and gentlemen, speaking of rules, here are some more rules for you. Globex trap trading rules. Let's walk through this here. For the bear trap, step 1, we call this the trigger. Price breaks below the Globex low. The mass reaction again, traders become bears and they plan for breakout, or they plan to sell, or they do sell to the downside. And a trap condition is if they sell into a demand level below that Globex low. That's right where we want them, where we trap the bears. So what's our action? Our action would be to buy from that mass reaction of sellers right into a demand zone that is located in our time window of opportunity. So that is the bear trap. So we are trapping the bearish traders. So, and the bull trap, just the opposite really. Price breaks above the Globex high, they are bullish, that's the mass reaction, traders become bullish, hence the bull trap, and plan for breakout to buy, or they do buy. Step 3, supply level above Globex high, that's the trap condition. So if they're buying into that supply zone, what do? That's step 4, we sell or short into the mass reaction for those buyers. All right, let's walk through a few different examples here, some real trade examples. All right, this first one that we see here, we have a chart with the Globex high, Globex low. That's our extended trading hours, your Globex range from high to low, and price breaks out above the Globex high. So again, think what's our play here? Well, when price breaks above the Globex high, novice traders, they become bullish. They start to buy, they buy above that. That's the breakout trade. But look to the left and you can see highlighted over there on the left, we have a supply zone that was created in our window of opportunity from 8 a.m. to 11 a.m. And that is where we want to sell short. And you can see this one worked out quite well. We have a very strong move to the downside there. All right, here's a demand zone. So this one would be a bear trap. Here's our Globex high to low. Here price breaks below the Globex low, right into demand zone, off to the left over there, and we have a nice move to the upside. So there is your bear trap. So again, wait for price to trade below the Globex low, right into demand zone that was created in our window of opportunity, and then would basically set up our bear trap. So now here's another example. Globex high and low are highlighted there. Now take a look at this one. Similar scenario in that you have the Globex high and low, price broke above the Globex high. We did have a supply zone off to the left over there, but look what happened. It kept going higher, so bull trap did not work. Why? This is where you really need to plan this out ahead of time. And this is important that you understand this. Just because you have a strategy doesn't mean it's going to work every single time. That's just trading. It doesn't work every single time. Unfortunately, that's just the way how things work. So we have to ask ourselves, well, why did this trade did not work? What do you think are some reasons why? Well, that's going to get back to our total overall strategy. We would ask ourselves, well, when we went short here, was it low in the location? Was it high in the location? Was it in equilibrium? Was it a good quality supply zone? What was the trend? So that would play into effect. So we want to go back and look at this when we set this trade up initially and really ask ourselves, does this meet the requirements of a good trade? Am I high in the location or very high in the location? If so, then this trade has a much higher chance of working out compared to if it's very low or low in the location. So keep that in mind when you're looking at these trades. Ask yourself, where am I in terms of location? And obviously, what's my trend? What are my zone qualifiers? Is that zone good or not? So all things like that. Remember, we're looking for the total trade here, the total package, not just because price breaks above the Globex high and then we short. It's a lot more to it than that. And that's why I wanted to show you this example here to get you thinking about it ahead of time. All right, let's summarize the rules. What is the ideal zone? It is a zone that is outside of Globex high and low and created between 8 a.m. and 11 a.m. Hence, we want to trade supply zones above the Globex high or demand zones below the Globex low that are created between 8 a.m. and 11 a.m. for increased probability of success. And what is a bad zone? Well, a zone that is in between Globex high and low.
More summary here. During the Globex session, ETH highs and lows are created. As soon as the RTH begins, most traders will look at these Globex highs and lows as support and resistant areas. As soon as the price breaks through the Globex low, most traders become bearish and plan a breakout trade to the downside, a short trade. If there's a demand zone underneath the Globex lows, bears will be trapped as we would be buying from these sellers. The bull trap is the exact opposite. It is applicable to at ES, at NQ, at RTY, at YM and their CFDs. Alright, perfect. That's it for this lesson. Stay tuned for the next lesson. Happy and safe trading, everyone.